There we go. So it's currently the 15th of July. Market open. Let's do a little top-down analysis. I just did one, but I'll go through it again, and this is what I'm looking at for the day. So let's go to the 5 second, and really and truly, all I really do is zoom out like this until I can't zoom out no more and map structural highs and lows. That was the 5 second. This is the 1 minute. And as we can see from the 1 minute, we had a break above and a break below. This is the last previous range we just came out of. Tap the 30% and left. I'm gonna so far nothing much for this open, but in order for me to engage, first of all, it has to be it has to be after 10:30, right? Mm, there we go. So that's when I choose to trade. Why? Because I don't want to get involved or even engage in volatile environments. And um, if we've been present during market open, it's a common characteristic in which you will see that, we usually we're usually in an unstructured environment, if I can say it like that, right? So you will see structure created and broken, usually on the 1 minute. It could be on the 15 as well. I can see it on the 15, but usually it's on the 1 minute. Yeah, yeah, yeah. I'm not saying that price is gonna go up and take out this high. It certainly can, but no need for our expectations to be so grand. So we ended up taking out structural high right there. This is a structural high on the 5 second. We got a 5 second closure. Do we get a wick? Of course, that's a wick. Trust me. Now, of course, I want to be trading this session, but initially, did we get 3 pullbacks? Where's the? Oh, we did. I think. Let me see. One. We didn't get a closure below here. So one, two, three. Liquidation of the third. Closure above a structural high. We got a 1 minute wick. Boom. So that falls in alignment with how I trade. You guys have seen many examples of how I trade with the live executions that I've been putting on YouTube. But I said that we're gonna do a top down, right? So let me just do that real quick. We was on the 1 minute. On the 1 minute, I see that we're currently in this range from this high to this low, right there, right? And we're in a range and we're sitting inside a previous range, the 50%, and we saw shift out. So that's where we currently are. So in the event that price goes higher or lower, we know that this range here becomes the previous range. My bad, not even. We know that, hold on, this range here becomes the previous range. From this high to this low becomes the previous range. In the event that we get a closure below, in the event that we get a closure above, we know that then from this high to this low, the current range that we're in is that will be the previous range for price to move back into. If we go on the 12 and I zoom out, there wasn't really much. Hold on, let me 20 should be alright. I want to see, I want to see. There's a previous range around here, maybe 25. There we go. Yeah, that's just enough information that I need to see for this, for the current market environment right now, in this present moment. This is pretty much all you need to see. What is it? This is from the 20th of June. So, yeah, and when we look at our structural highs and lows, obviously we've got this one here. We broke out of a higher time frame low. I think I already discussed this, maybe not, but that is the range we're stepping out of. We tapped the 30%, so a strong rejection. Now, when I look at the market like this, I always plan for higher and low prices. I don't fix myself onto the idea that the market has to go up or it has to go down, either or. I always plan for both scenarios, for both plays. So when I see this, I'm recognizing that this low is weak right here. Not only that, this high is weak. So it's weak in the sense that it's failing to put in a new low or put in a new high. Now, granted, these two structural points come from different time frames. So, though this low is weak against the higher time frame, why? Because in order for this low to be valid on the higher time frame, I told you this is coming out of a higher time frame previous range here. If I just show you on 144, you know what I'm talking about. This is what I'm talking about. So from the 144, this low is not valid until we get a closure above this high. But on a lower time frame, this low is valid because we broke below a structural low. So the low on the 12-minute, right? This is a valid low back into the previous range. So this high is weak simply because it didn't put in a new low. This low is weak because it didn't put in a new high. So it's a thing where when I look at price right now and what I'm anticipating, it's a thing where I'm looking for the high or low to be taken because weak highs and lows usually get liquidated. Price usually doesn't respect their position in the market, right? They usually don't hold. So when I look at this, I'll explain these purple arrows later, but that's why I have these, if price goes above, if price goes below. Because even this definitely, I can't even say definitely because I say it's a weak low because I'm observing the market from a higher time frame perspective that allows me to discern the usefulness of a high or low. Because though this low is weak from a higher time frame, it's not weak from a lower time frame. But the reason why I choose to move forward with my analysis to contribute to my directional bias is because the higher time frame has a stronger influence than the lower time frame does in regards to their relationship with price. So the concepts, the way you trade on the lower time frame, we know price is fractal, right? In fact, I'm gonna make a whole video on price being fractal or whatever because people throw this word around so much. But if they had to explain it to a child, they wouldn't be able to. But that's how I'm gonna structure the video. But that's for later. So paying attention to or starting or how can I call it? Your mindset when it comes to making a decision, an informed decision, is one of it's a thing where the foundation of your reasoning stems from the higher time frame. And that's a practice, that's even a value that you need to see for yourself in the market. Now, many traders agree among this, but I don't encourage you to just follow the herd. I encourage you to experience it in order for you to say, oh yeah, 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 the price is fractal. Oh yeah, 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 price. The higher time frame has more influence on the lower time frame. The lower time frame does on the higher time frame. So it's not because of what price does on the lower time frame that price is gonna now do something on the higher time frame. No, it's because price did something on the higher time frame that the lower time frame is gonna do something. So, bro, where did you come from? This is the 144. I don't really do I don't really go higher than the 144. The 144 is just a division of 12. So you see how I go from the 1 minute, 5 second, 12 minute, and now obviously 144. Obviously 5 seconds. There's a times 5 by 12. That's 60 seconds, and obviously 60 seconds is 1 minute. Um, I got these time frame intervals from Dave Teachers, which is where I learned how to trade, or at least the foundation, right? But pretty much all I fucking know is from Dave Teachers. But yeah, and it works very well for me. You'll be able to see price in sync with other time frames when you're trading anyway. You'll always see price in sync, but when I'm trading, like how the information is presented on a chart, I believe like the division of 12, it's like sometimes I look in the chart, sometimes I view a chart and I just think, yo, like I'll tell you, I'll show you when I do this shit. And this is the reason why I even have these higher time frame candles on my chart. So it's doing shit like this. And then obviously without you can see how they can match without the higher time frame candles being there. This is a 12-minute chart. You know what? Let me just make it non-visible. Why would I even need to do that when I can just do this? There we go. There we go. So you see how it just syncs? They sync together. So the 12-minute zoomed out is, how can I call it? The 12-minute zoomed out is the 144 candlestick structure. So the open, high, low, and close of the 144 matches well with the 12-minute zoomed out. And that's precisely the point. See, this whole routine of going from the 5, 1, 12, and 144, the purpose of this routine, mapping structural highs and lows, is to understand where you are in the market. Shit, is it 10:30 already? No. right? Because I thought, oh, okay, cool. The whole purpose is to understand where you are in the market, and how you do that is by zooming out from the lower time frame and mapping structural highs and lows from the lower time frame to your higher time frame. Now, of course, you don't have to use the same time frames as I do. However, I do recommend it. So, alright, cool. So, in this top-down analysis, knowing where you are is a crucial part, and it's just the start, right? That's just the start. Now, I want to talk to you guys. You guys see these gray lines here? Oh, the higher time frame candles that you see here, the ones that are white, this is coming from the 144, and the grayed out candlesticks that you guys see, that ended up becoming whole wick. So this is basically the 12-minute. It's just that I have I'll show you. I have the 12 and the 144 in the same time frame. That's all it is. So that I can see what's going on in the higher time frame, rather than having to constantly going back and forth between charts. It's more efficient. So what I usually do is I zoom in now. I zoom into the open, high, low, and close. So I should be able to see the open, high, low, and close of each candle clearly. That's what I mean by zooming in. And when I zoom in, it's all about mapping higher time frame levels. You know, levels that have a high probability of, okay, cool. I was about to say it like it's the levels that cause it, but no. It's just areas where price is most likely to reject from. That is all. I'll go in depth with it, but not in this video. Yeah, that's a whole nother video. But if anything, what I want to stress the most with you guys is about knowing where you are in the market. It's the most important, bro. The most important. So I've already mapped my higher time frame levels, and I said that I was gonna do that in another video, and I do intend on doing that in another video. But essentially, if it's not about mapping higher time frame, okay, cool. So yeah, another reason why I zoom in is to read candlestick structure. And by reading candlestick structure, if you've watched the foundation playlist that I made for free on YouTube, you would understand how I interpret structure using candlesticks and by not zooming out. So essentially zooming in. How I determine structure using the open, high, low, and closes of each candle. And if you want to know specifically, I recommend that you watch up and down candles and structural highs and lows in the foundation playlist. Those two videos, you will understand what how I analyze and how I interpret the information. So we see here that we got a closure below this last up candle. We have an up candle here. So really truly it was this. See a closure below it. We failed to close above it to eventually close above it. So this is a structural low. That was a previous high. This is a structural high. I don't think we went above it. I think we did. Okay, we did. I put my thing on the wrong thing. It was supposed to be at 10:30, not 9:30. That's what I thought. It was 10:30 already. That's already been achieved. I think that's a wick, but we don't need to go that close just yet. And bro, obviously when you're doing your top-down analysis, there is no reason why you should be rushing at all. The whole point of your top-down analysis is to give you directional bias. That is the whole point. And you know what? That's probably gonna be what this video is gonna be called, like something along the lines of directional bias or top-down analysis or some shit. All right. So when we read candlestick structure like this, we now have a more detailed report of what price is currently doing. Because what we've been doing up until now is understanding where we are in the market, yes, but on a higher time frame level. Now, when I'm trading, I make it a point to trade in the current moment, in the present moment. And that's what me zooming into the open, high, low, and closes of each candle is about. So we read our structure, right? So I'll just move into the 1 minute. With the 1 minute, I do the same thing. So this is what I see. But that was a wick, right? Got a wick there. A wick there. So we're still within. We're still within this range right here. And do you guys see what I mean about the characteristic, the behavioral characteristic of market open? It's a thing where you usually see both sides of the market um, violated, structural high and the structural low. And it's very common for you to see this, and I wouldn't recommend even trading in that environment. Just expanding the mental energy, expanding the mental energy to even try and find a position within these hours. Well, that's just something I personally don't engage in for real. And apart from that, it seems like price is literally just ranging between this and this. And either side that it chooses to close above or below in, would create another range. But so far, on the 1 minute, even on the higher time frame, it's a wick. We've got this previous range. But understand that the higher time frame determines what the lower time frame is going to do. So you can't, me drawing out this box here, a previous range that, now, so let's say, look, I only limited my perception to the 1 minute. Let's say and I arrived to a conclusion in my decision to say that, yeah, man's bullish, bro. Not understanding that we failed to close above this high on a higher time frame. Because I respect the higher time frame decision more than I do with the lower time frame, I'm not going to engage in a buy here. Why? Because the odds of success of price going higher are lower than the odds of success of price going lower. Why? Because the higher time frame. Price price been here and it closed down here. Now, price can do whatever the fuck it wants New York open. I can't lie. At this point, I just say it's just like there's no rules. You feel me? There's no rules to this shit. It does whatever the fuck it wants. That's why I avoid it. I do still observe it like how I'm observing it now, but I choose not to engage. I choose not to participate. Usually around the market open hour, yo, these candles have stopped moving. Why? Hold on. 3, 4. Maybe it's time to say that, yeah, because I can't lie. I pretty much explained everything. Now, of course, you're not gonna know everything just from watching this one video, but for some reason, why are the time is still going? But my candles have stopped. Either way, I'm gonna end the video here, and I'm gonna hop back in and trade with the group at 10:30. But yeah, I'm out, yo.